You're watching the NWR Investor Conference, November 2020. On the line, we have Family Zone. Family Zone Cyber Safety is an ASX-listed tech company and an emerging leader in the fast-growing global cyber safety industry, aiming to support and protect every child's digital journey. Family Zone's unique innovation is its patented cyber safety ecosystem, a platform enabling a world-first collaboration between schools, parents, and cyber safety educators. Family Zone's unique approach is delivering rapid growth in the education sector, as well as through direct sales to parents. We have Tim Levy joining us today. He is the Managing Director of Family Zone. Tim is a successful telco and tech entrepreneur. He founded Vodafone's largest Australian retail partner, Moat Mobiles, and was the former CEO and COO of listed Optus reseller B Digital Limited. Prior to working in commerce, Tim was a management consultant at Anderson's, working with tech and change projects across Australia, South Africa, Zambia, Jordan, and Saudi Arabia. Over to you, Tim.
Thank you. Thanks for the lovely introduction, and thanks NWR for organising this webinar series. Look, so let's get into it. We've obviously had a very interesting couple of months and a huge 2020 so far. So a bit of background. So this is what Family Zone is about. So those who don't know the story, Family Zone is a cyber safety company, as distinct from cyber security, which is about protecting information and assets. We're about protecting kids, and our ultimate mission is to make what's the usual part of growing up in the real world, right? Parents looking after you, or what you do, and making sure you cross the road, safely and so on. Taking that as part into your online experience, and principally by making parental controls and parental supervision online as part of a normalized activity for parents and for kids. And the reason this is so important is really this slide. Despite massive investments by governments, awareness increasing by parents and schools, literally across every single measure of cyber safety, things are going the wrong way. I mean, the stats are horrific. Those, and I talk a lot about this, those that have seen the recent Netflix documentary called The Social Dilemma will have seen this, but youth suicide has doubled in the US in the last 10 years. Mental health issues have doubled similarly. Access to pornography, bullying, sexting, and so on. These are now the normal part of life for our kids. And it's a shame, and it needs to be fixed. And we're going about fixing it in a way that no one really else has. And the reason we've approached it this way and others haven't is I guess because of the structure of our industry, where you have parental control providers on one side of the market who really have limited their focus to downloading software onto your PC or your smart device and allowing a parent to lock that down. And then on the other side of the market, you have school filtering providers who have dealt with the legal and compliance obligations of a school and tried to limit their use cases or limit their responsibility to the school fence. And so no one apart from us, no one in our industry addresses both markets. And that's, if you think about it, it's kind of silly, because with mobility, with kids getting devices at school and taking those home, or parents buying devices at Harvey Norman and those becoming used in schools, or taking their personal mobiles in and outside of the school environment, that kind of siloed approach to cyber safety is clearly flawed. Right? Schools can no longer say, well, I've got a lockdown schools network, we're fine. These issues are now being brought to their school, and school issues are now being taken home. So mobility has blown up the industry. And we are the only market player that's got a solution for it. And then layer on top of that coronavirus, where you had 57 million kids in the US sent home in March, with probably 20 million of those with a learning device, with a school issued device that went home, that was creating problems for mums and dads. That's highlighted, better than I could have ever done, highlighted the fundamental problem of mobility, and why what we've been talking about for 7 years is so important. And not surprisingly, you've seen a huge upswing in interest in what we talk about in the commercial markets, but also in the capital markets. Investors have got behind us now with 2 capital raisings, because they've seen the super relevance of what we've done. And with coronavirus, and I'll talk a bit more about it in a moment, coronavirus, particularly in the US, has stimulated massive investments in online learning technology, and which businesses like ours that are cloud enabled and that support parents, we're in a box seat to take advantage of. So in simple terms, why are we such an investable opportunity? It's because the market is ripe. There's less than 4% of parents use this stuff globally. It's an industry with no dominant provider. Mobility has created a fundamental new problem that none of our industry is prepared for. There's massive tailwinds with investment, media interest, and schools, required and or wanting to get involved to support these things. And it's a $64 billion untapped opportunity, and I honestly think that we're the only one, in the prime position to take advantage of this opportunity. Now let's talk about the US, because the US has really been our focus the last 12 months, and it will be the biggest part of our focus for the next few years. Because not only is it massive, it's 57 million students, 83 million parents, most of which don't have parental controls today. But the real opportunity is through regulatory models. The Children's Internet Protection Act and the E-rate funding means that school districts in the US have access to funding for devices, and by law, they have to make sure those devices have porn being blocked by a filter. And with these challenges of mobility and coronavirus, it means that these devices are going home. And so all these schools are now being forced to look at players like us, cloud-based filtering providers, and put technology on these kids' devices so they're always safe. A network-based model where you lock the devices up at school, and you can filter things using your content filter, your firewall, or whatever, that's gone. So those school districts in the US that are using their Palo Alto or Fortinet Zscaler type filtering product through their firewall provider, that's no longer possible. So there's a big part of the US market they're literally having to move away from their existing providers and move to these more contemporary style products like what we have. And we have some serious advantages over a lot of those players in the market. Broad suite of functionality, technical capability across on-prem and cloud filtering. But what we have that no one else has is the ability to reach into parents' homes and support schools' engagement with parents to create cyber safety outcomes. So look, we entered the US market a couple of years ago, bashed away with some small school districts like 1,000 student, 2,000 student school districts. We're now selling into many school districts with more than 50,000 students. Product market fit's validated. We're converting more than 40% of the leads that we get. All of our leads are sold through proof of concept trials, and we're converting well north of 83% of those now. So product market's validated, and now the next stage for us is to accelerate. And we see we can accelerate in the US through two things: continuing to innovate, build new features. And why that's important is because we're selling against an incumbent always. There's never a greenfields opportunity in the US. And we're selling to a guy who's already got a product, and we're trying to prove to that CTO the value in moving to our platform was greater than the cost of the transition. And so that does require constant innovation, new products, new features, new reports. And there is also the opportunity to value add, to get a premium pricing as you add best of breed features to these sorts of products. So that's the main driver of increased acceleration in the US. And then the second one is delivery. We are super focused on having exceptional experiences for our customers. And so our delivery capability, we're in a sense, we white glove our deployments. Now, these are sophisticated clients. Once you've got them up and running, the inbound calls are very low, but we want to white glove the deployments and exceed their expectations for the quality of our after sales support. And that's working incredibly well. We're getting NPS scores, for those that know what that means, net promoter scores of close to 40, sometimes over 40 in our US deployment. So doing incredibly well, and then we want to keep doing that, innovating with product, rolling out delivery. And so this recent capital raising that you may be aware of that we completed, a big chunk of that is actually continuing to position ourselves for growth like that. We don't need to massively scale up our sales teams because, unlike Australia and the US, all of our sales are sold through value-added resellers. So in a sense, we've got thousands and thousands of tech vendors out there, people with their clipboards selling to the CTOs on our behalf. So we can leverage that channel. What we need to focus on is being product-led and delivery-led, high expectations. So US, big part of our next few years, where our targets is to get to 10% of that market in the next couple of years, next 3 years. I kind of touched on this, I guess, already, and those that know the story would know this well. Our product set solves the compliance needs of schools, and the same technology, enterprise technology that allows schools to keep students safe, we make available to mums and dads. And we do that through what we call the community proposition. It starts with a free product, so parents using the technology that's on the kid's learning device can get insights and reports and see that the kid's gone to a porn site or a gambling site. And at some stage, they might decide, well, that stuff stops. And through in-app purchases or entering their credit card, then they can subscribe to Family Zone to stop that activity happening. And this is our business model, selling a compliance product to the schools. Schools have budgets for this. We're getting about $750 per student per year for our compliance product. And then using our relationship, providing a great service to schools, building a relationship with parents, and then seeking subscription revenue. I think we've got about $10.5 million of recurring revenue today. 9.5 of that is in the B2B business, and nearly $1 million of that is in our subscription revenue at the bottom of this chart. But that subscription revenue from consumers is only in Australia. We haven't yet launched that properly in New Zealand, or for that matter, the US, which is coming in the next few months. So look, just a quick few slides on where we're at. We've recently completed a capital raising, which has been a tremendous boost for this business, and it's great to see some support from some of the most significant institutional investors in Australia. So we've changed our investor base to become institutional now through this placement and through some great relationships with brokers. So we feel we're very well supported and well positioned, growing really well. We've got more than $10 million of recurring revenue, nearly 3,000 schools, and we're zeroing in on 2 million students, which will be in the next 3 to 6 months. This chart, we've consolidated into a single chart some of the key metrics for the business. And the key thing to look at if you're wanting to assess my performance is the number of student licenses we have, which you see on the top left. Growing incredibly quickly in the last couple of months, which does align with the sales cycle in the US. And that grey box, as I like to remind people, is our POC, so people trialing our product in the States. And that's a very qualified sales lead in a sense, and we're converting 85% of those. So you can almost calculate in your mind what our forward sales will be, and that's kind of why we put those charts out there. Growth in contract revenue, growth in collections, growth in recurring revenues, like it's all kind of 2 to 3 times year-on-year growth. And I do want to emphasize the point, it's best to analyze Family Zone on a year-on-year basis. There are distinct sales cycles in our industry. So if you ever look at our business on a month-to-month basis, you're kind of missing the picture. Year-on-year growth is the key in our business. As at the end of September, we had 2.5% of school districts. It's getting close to 3% now. And all this great activity, as you see on the bottom right, is now turning into cash flow. And in the September quarter, we're on a normalized basis, we're effectively break-even cash flow, which was a tremendous result for us. Now, in more recent times, obviously we're still in business and things are going from strength to strength. In October, we've added 94,000 students, which is, essentially, it's near on $600,000 of recurring business was added in the month of October alone. So that shows that even in a down cycle, the December quarter in the US is a low sales period where, 60% of US sales are done between April and August. The other 40% is still massive, and we're outperforming the market and getting a big piece of that. So it's been a tremendous start to this quarter, and those multiple times growth that we've experienced year on year, I think investors can be confident that will continue. So let's talk about the recent funding and what that means for this business. So as I said, we raised $20 million a week or so ago from institutional investors in Australia. And that was on the back of the recent performance where we've proven the product market fit, we've proven we can scale this business. The next phase of our activity is really in these 4 domains. Firstly, it's growing the B2B business. So getting access to more and more schools, not only in the US, but opening ourselves up to new markets. 2 have been identified, and we'll be in those markets next year. We're going to follow the same pattern that we did in the US. You enter the market, build a team, experienced team with local capability. pilot, prove out the product, bash the product into shape, I guess you could say, and then that next sales cycle take off. That's what we did in the US. If you look at the numbers, kind of think about that as our go-to-market in these other markets. The next phase for us launching in the US in the early part of next year is B2B2C transition, selling through these schools to parents. The third arm is layering services into our product to make us more valuable and more sticky. And there's serious opportunities to grow the value of our schools business in there. Some of our competitors that have got specialist products charge twice what we do, but they've got a more limited audience, but they sell a premium product. So there is that opportunity for us to, if not 50%, potentially double our revenue from our schools base in the coming years. And finally, which is the area that I'm spending most of my time at the moment, is just building this organization for the business that it's about to be. Building scale, ERP systems, product management structures, putting in place the structures in our business that means that we can cope with the scale that's coming to us, and also make sure that we're spending this funding that we've been granted incredibly wisely and diligently. So these are the 4 areas. This slide was actually used by me when I pitched this capital raising to the board as to what's the strategic focus of this business and why is that funding necessary. I won't labour the team. I think those that have seen this presentation before will have heard me speak about this group. And then this is the kind of corporate summary at the moment. Post raising, we've got about $27 million in the bank. So we're very well funded for what we're planning to do. Market cap of $155 million and tightened register with a solid, very significant institutional part of our register now. So but that's it for me, and I'll hand it over to Q&A.
Thank you so much, Tim. So from what you said, US is clearly the focus for Family Zone. Do you have US investors on the register?
Yeah, we have a few. So in that recent placement, we did earlier in the year in October, we I think it was like 20-30% of that placement came from the States. We've also got some people that came in from the US a couple of years ago, so a little bit. We did in this recent placement get some quite significant bids out of the US, but the logistics of doing that was difficult. And so we've got a number of relationships we've been building in the States that we'll keep working on. I mean, ultimately, we need to become a US business. I think everyone knows that. So building these relationships in the States will be important for us, not only in a capital sense, but also in the opportunity. So it's a working process.
So yeah, the goal is to become a US business, but obviously you do have a presence in Australia. What would you say are the barriers to increased adoption in the Australian school system in particular?
Yeah, there's a big difference. Australia, in the private schools, they're a more sophisticated, complex sale, and they're smaller than the school district, so it's more expensive, cost to acquire. In the public school sector, these are immense organisations that typically deal with the big internet security providers. So we've been to date too small to be relevant, but I think that's changing. One of the impediments in the market here, though, is the dominance of BYO devices. So it means that our deployment strategy in Australian schools and New Zealand schools often requires somewhat of a negotiation between the school and the parents and so on to get our technology onto that kid's device, because these devices are owned by mum and dad. But in the US, that's not the case, because the devices are owned by the schools, and the schools have access to enterprise MDM tools, which means we can deploy instantly and provide a high quality service that we can deploy instantly and at low cost. So that's probably the biggest barrier, is it's more expensive for us to scale in this market. As a result, we've kind of reduced our focus on growth in these markets and really focused our attention in the last 12 months in both Australia and New Zealand on having testimonials. So we've got great relationships with almost all of our schools here now, and piloting new products and features and approaches. So that's kind of the approach now. As we scale up our platform and go even opportunities for the big system-wide deals in Australia, think Catholic education, smaller states and so on. I think that will come, but yeah, they're the key differences.
Do you have a channel program in Australia, Tim?
No, we don't. We don't sell through the channel here, and initially we didn't, because our product is incredibly different to our competitors. So our competitors who are selling filtering and firewall products, they're selling tin in a sense, right? They're selling, plug this thing in and it works. Whereas what we've got that too, but we say, not only that, but we want you to now engage with your parents and let's create cyber safety outcomes for the whole community. It's a very different sale. And so if you've got a guy who's out there with their, with their folder, just, getting orders for equipment and software as a service, it's very difficult to get these people to sell this. So that's how, and again, that's how we're selling into the private schools in Australia. We don't sell like that in the US because we're talking to public schools. So yeah, having a channel partner selling this for us in Australia hasn't really been suitable, certainly not for the product that we're selling.
So you've outlined the market roadmap, so to speak. Could you maybe elaborate a little bit more on the product roadmap for Family Zone?
Yeah, look, so keep investing in really these domains. Our compliance product is all about quality filtering and the seamless integrations into the systems that are problematic for the CTO or the head of IT of a school district. That's just a constant iterative process. There's, we've got a lot of market leading stuff under the hood, but no features that I think people, I could show to a group of investors and they go, wow. The next range of products for us is classroom management tools. So empowering a teacher in a modern classroom, and that modern classroom may be a virtual classroom. We've got some competitors who price their product well beyond ours. So there's a full squad now and a product owner in our business that's developing features to support teachers. The next element for us, which is just being kicked off really now with the help of Matthew Stepka, who joined our business from Google earlier this year, and he's part of the AI program at Berkeley. We're driving a whole suite of AI and machine learning driven tools to support the well-being of kids. In simple terms, help kids deal with cyberbullying, look for indicators of suicide, depression, and potential gun violence. There are competitors in the US that charge, like $9 US per student per year for those sorts of products. So you can really climb up the food chain with those sorts of services. So there's investment going into that right now. And then we're also building, and we haven't talked to the market about this now, but we're also building some kind of AI reporting and dashboard tools for our school clients, so that, for instance, a school district can look at their cyber safety performance, can compare it against other schools, other school jurisdictions. They compare Catholic schools versus Anglican schools, can look at US schools versus Australian schools, and all the massive amounts of data in our platform is going to be available really for anybody on a secure and anonymized basis, including making that available to the media and sensitively, and people like eSafety Commission and stuff. So we've got a vision to actually make the insights available and the enormous amount of data that we have available to schools, decision makers in and outside of schools to make better decisions. That's a product that's coming down the pipe as well. And then a key big part of our focus obviously is what we call B2B2C transition. So it's supporting parents to use the same technology that schools have deployed to get the free versions, like reporting versions of our tools, and then those parents that choose to get the paid version of our tools, which allows them to control kids' activity. So they're the kind of, I think that's 5 arms of development.
In the interest of time, we have one more question for you, Tim. Plenty planned, obviously, for Family Zone, and plenty that you've outlined for the US in particular. Would you consider a US listing for Family Zone?
Look, it's not something that we can consider right now, albeit like we've certainly investigated the logistics and we've got people that have done it. So it's not unfamiliar territory, and it's not something we don't think about. But the reality is I can't travel to the US. I can't really service that market. The investors in the US, I can't really service them now. So it's not something I can put my time into. In the fullness of time, does it make sense? Absolutely. I think a business like ours with the potential like ours would make sense to be listed in the US. But at the moment, it's not on my critical path. And again, I can't service that market. So it's not much I can do.
Great. Thanks for joining us today, Tim. And I hope you have a lovely day over in Perth.
My pleasure. Thank you.
Thank you.